Hey guys, in today's video, we're going to talk about building confidence in your trade by using multiple time frame analysis. Hey guys, Kill here. Welcome back to another episode of The Trading Edge. Thank you as always for taking some time out of your weekend to check my videos out. If you guys are brand new, I'm a Forex trader, a trading coach, and one of the co-founders of Tier1Trading.com. And The Trading Edge is a weekend video that I do providing a stroll around the markets, showing you what's on my radar for the week to come. Now I do two versions of this video for our Tier 1 Premium members and trial members over on the site. I do a full version, which this week was about 30 minutes, so a little bit longer. But here on YouTube, because I know the attention span is a little bit shorter, I try to make it quick. I pick out one of the pairs that we analyze, preferably one that gives a not just a good example of a trading opportunity, but a good lesson on technical analysis as well. And then I get you in and I get you out as quick as possible. Now, before we hop into today's video, I want to share with you a massive event that's coming up, so mark your calendars. August 19th, we have the Trading Edge live event. It's going to be a 4-day online workshop. It's going to be awesome as ever. If you haven't been to any of our workshops before, it's really engaging. It's not just PowerPoint slides. We're going to do actual analysis. We're going to teach you strategies. We're going to do live trading. We're also bringing in a very special guest, the GOAT, right? Mike Bellafiore, owner of S&B Capital. He's going to come in and talk about what it means to create an edge in the market and tell you what it takes to be a 7-figure trader. So it's a completely free event. As always, there's a link below in this video that you can check it out, or below in the description box, whatever. You can click it, register, but mark your calendars, August 19th. We just need you to bring two things, right? We need you to bring a notebook, and we need you to bring an open mind. And of course, when I say bring, I mean arrive at your computer with that, since everything is online. Anyway, let's hop into today's video, and I hope you guys enjoy. Giving you a whole different type of look for things today. And on the 4-hour, we have a potential head and shoulders. Now, I'm on the daily right now, and I just want to show you what has happened on the daily. We've come off this descending move, right? This bearish move. And we've put in this type of pattern. Now, what type of pattern is this? What can we pair it with, and what does it tell us? Well, this is a descending channel, right? A descending channel, which is a sign of relief, right? The market has been in a strong bearish trend, and then the trend has started to slow down. Still going bearish, yes, but it started to slow down and be more neutral. We can add that with some bullish divergence here on our RSI, and it can give us a good clue that the market's ready for some relief. Now, what is relief? Relief is a retracement. Now, it's key that we use the word relief and not reversal, because when we think reversal, we think a complete reversal, the current trend is going to end and the market's going to go on the opposite direction forever. Not the case. We're expecting a little bit of relief, a little bit of a retracement, and then for the market to go back to its normal ways. And that's exactly what we've done here, right? We've rallied up. We found a massive zone of selling pressure right here. And then we put in a engulfing candle, right? We have two pretty cool things right here, right? Cool being a technical term. One, we have the massive engulfing candle, which I think is a big red flag for selling pressure. But we also have that 3-bar reversal, right? We have the bullish momentum, we have the rejection, the tall wicked candle up here, and then we have that long high momentum, heavy momentum bearish candle right here. And then the market tried to retrace, tried to make up for some of it on Friday, and it failed. Well, how do we know it failed, right? Foundation course members, right? We see the wick to the upside. This tells us a story. This tells us that at some point during the day, price did this. Bullish pressure, yeah, buy, buy, buy. And at some point, the seller said, hold up, no. Back down you go, right? And although we ended the day with technically a bullish candle, I look at this as a bearish signal. So again, for you guys that haven't taken that course, please go back and take it serious. I know when, some of you like to rush through. I spoke to a trader the other day on the platform who was like, Akil, I'm so overwhelmed and something like that. I think I might have went through the courses too quick. Go through it, right? It's important that we learn how to trade, not what to trade. I know everyone's in a rush to kind of get the secret sauce. Teach me the strategy. Let me go straight to the mastery course where I can start developing strategies and testing and trading and making money. But These are the small things that give us an edge. These are the small clues that make up technical analysis. Being able to read a price chart, being able to identify and interpret what a candlestick is telling me, and not only what a candlestick is telling me, but separate the important messages in the market from the junk. Because most of the market is junk, right? Think of it like a word search, right? A word search puzzle where you have all those words in there and you know, or all those letters in there, I should say, and it's like find the word, and it's like all these letters, oh, there's a word. All those letters, oh, there's a word. That's our job as a technical analyst, to kind of ignore what's random and then pick out what's important. So we have that story right here of more of a bearish story. We keep that mindset in mind as we go down to the 4-hour chart. And what do we have here? Well, that little combination, that 3-bar combo, right, followed by that 4th rejection bar, ends up being a pattern, right? Again, we have this, we have that, we have the move up, we have the big engulfing move down, we have the market trying to make up for those losses the next day, we have a rejection right here, bada boom, bada bing, right? Head and shoulders top, right? And we're trading right back at the neckline. So this is a classic reversal pattern in the market, which fits into the theory of the higher time frame, right? You see higher time frame working in with the lower time frame together. We talked about that in the Foundation 2 course, right? Putting everything together, getting on the same page. Look for the break of the neckline. You can draw it 2 ways. I like horizontal support and resistance. If you're a trend line trader, you can do, should probably find out where the low is at here. If you're a trend line trader, you can connect the dots and draw like a trend line here and look for the break of that. But the idea is that you want to look for a violation of that neckline, and then you want to look for a move lower. So not really a great structural level to shoot for, but this is where you can use some of your tools, right? You can start predicting maybe an AB equals CD for that extension. If you wait for the break and retest, there may be a smaller one as well. But right now, an AB equals CD will put you at 146.57, kind of in the meat of this structure. Fibonacci influence, that should be a 1.618. We're gonna have a 127 a little bit higher. Yep, 1.618 down there, 127 higher. We can take some Fibonacci retracements as well and see what that gives us, if there's any confluence there. You can see a nice 618 and a 127 right here. I think that's a pretty decent level right above our structure highs here to shoot for. But I'll tell you what, if you're someone that waits for the break and the close and just doesn't trade the breakout, we may be able to do some brand new analysis, all depending on how far we break out, how far we retrace, and then we can certainly add that before making a final decision. But initially, I think 147.30s, 147.30s is a good level to shoot for. And again, it doesn't look like much, guys, but realize we're trading right now at about 147.86s. 50 pips of profit in here. I know it's not your home run trade like you guys see on the internet where people are like, I got 1,000 pips of movement today, and they really didn't. But I think many traders will tell you, if you can make 50 pips in a trade, especially with the low volatility markets we've been having this year, that's a pretty darn good trade for you. All right, let's go to Aussie Yen next. So I hope you guys enjoyed today's video. As always, leave me a question or comment below if there's anything that didn't make sense, or if you just want to pop by and say, hey, Keel, great job. And also, don't forget to register the Trading Edge live event 4-day online workshop, August 19th. Link is in the description box below. Not only sign up, but make sure you share it with a trading buddy of yours as well. Look forward to seeing you guys there. And until next time, plan your trade, trade your plan. Take care.